wondered how the U.S. tax system truly works? It's a complex but essential part of our economy. Today we'll break down the structure and various levels of taxation, making it easier to understand. Let's start with federal taxes, the foundation of our national revenue system. Federal income tax is levied on your earnings, funding a wide range of government services. Social Security tax contributes to retirement, disability, and survivor benefits for millions. And Medicare tax helps fund health care for seniors and certain disabled individuals. Moving on to state taxes, which vary significantly from one state to another. For instance, states like California have higher income tax rates to support their public services. Conversely, states like Texas have no state income tax, relying on other revenue sources. Each state sets its own rules and rates, impacting residents differently across the nation. Finally, we have local taxes, collected at the city or county level. Some cities, like New York City, impose their own local income taxes on residents. Property taxes are a common local tax, funding schools and local infrastructure. Sales taxes are also collected locally on goods and services you purchase. In summary, you might be paying taxes at 3 distinct levels: federal, state, and local. Understanding these layers helps you grasp your financial responsibilities and contributions to society. Imagine working hard all month, you finally get paid and check your salary. Then suddenly you realize, wait, where did my money go? Welcome to Understanding Taxes in the United States. Let's meet Alex. He just got his first job in the U.S. He was told he'd make $4,000 a month, but on payday, he only gets around $3,000. Confused, Alex sees words like federal tax, state tax, Social Security, and Medicare on his paycheck. He asks, why am I paying all of this? Alex learns that in the U.S., taxes work in 3 layers. First, federal tax. This goes to the Internal Revenue Service, or IRS. This money helps run the entire country, like defense, highways, and national programs. Second, state tax. Each state has its own rules. If Alex lives in California, he pays state income tax. But if he lives in Texas, he pays 0 state income tax. Third, local tax. Some cities also take taxes. For example, people living in New York City pay extra local income tax. Alex realizes he's not paying one tax. He's paying 3 different taxes at the same time. At first, Alex thinks, if I earn more money, I'll lose more to taxes, so what's the point? But then he learns about something called a progressive tax system. This means you don't pay one rate on all your income. Instead, the first part has a low tax. The next part is higher, and higher income means a higher percentage. So earning more money is always better. Then Alex discovers something else. Even before income tax, there are payroll taxes. These include Social Security for retirement, Medicare for healthcare. If you are an employee, you pay part. Your employer pays part. But if you are self-employed, you pay everything yourself, approximately 15%. As the year draws to a close, many of us, especially new taxpayers like Alex, start hearing about an important annual event. It's tax filing season, a time to understand your financial responsibilities. Each year, everyone needs to report their earnings and how much tax they've already paid. This is typically done using a key document, Form 1040. Remember, the deadline is usually April 15th. Mark your calendars. Even if taxes are withheld from your paycheck, you still need to file. Alex now gets it. If April 15th falls on a weekend or holiday, it moves slightly. One day, Alex asks, what happens if I just ignore taxes? Bad idea. If you don't file, you get a penalty around 5% per month. If you don't pay, another penalty, 0.5% per month. Plus, interest keeps growing daily. And in serious cases, the government can take money from your bank account. Reduce your salary, put legal claims on your property. Alex quickly realizes, taxes are something you cannot ignore. But what if Alex doesn't have enough money? Good news, the IRS gives options, payment plans, pay monthly extensions, more time to file special programs, reduce debt in rare cases. So the system is strict, but not completely unforgiving. Understanding state taxes is crucial for any entrepreneur in the U.S. These variations significantly impact your business and personal finances. Did you know some states offer a huge advantage? Florida, Texas, Nevada, and Washington have no state income tax, making them popular choices for business owners. On the flip side, states like California and New York come with higher combined state-level taxes, often exceeding 10%, a key factor to consider. Beyond income, there's sales tax, typically 5% to 10% on goods. Buying a $100 item, you'd pay around $105 to $110. Oregon has zero sales tax. Then there's property tax, paid yearly by real estate owners, based on home value. A $300,000 house could cost $3,000 to $9,000 annually, varying greatly. Navigating these tax differences is vital. Being informed about income, sales, and property taxes across states empowers smarter financial and relocation decisions. Meet Alex. He's just bought his first home, a big step. But with home ownership comes a new responsibility: property tax. This annual tax is based on the value of his home, a crucial contribution to local community services. These funds support essential services like schools, maintaining roads, and ensuring public safety with police and fire departments. Now, Alex decides to become a full-time YouTuber. His income stream changes, and so do his tax obligations. As a self-employed creator, there's no employer to automatically withhold taxes from his earnings anymore. He must now diligently track all his income, save a portion specifically for taxes, and make estimated payments quarterly. This includes self-employment tax, which covers Social Security and Medicare, typically around 15% of his net earnings. Without proper planning, Alex could face a significant tax bill, potentially owing thousands of dollars unexpectedly. Let's consider Alex making $60,000 a year from his YouTube channel. What does his tax picture look like? He'll be responsible for federal income tax, state income tax, and his self-employment tax contributions. This combined burden can range from 25% to 35% of his total income, a substantial portion. After all taxes, Alex might keep approximately $40,000 to $45,000 of his initial $60,000 earnings. But Alex learns quickly and becomes much smarter about managing his finances and tax obligations. He starts by consistently saving at least 30% of his income specifically for upcoming tax payments. He meticulously tracks all business expenses, from camera equipment to internet bills, to maximize his deductions. These legitimate deductions, like equipment and home office costs, significantly reduce his taxable income. By planning ahead and understanding the rules, Alex transforms tax season from a dreaded event into a manageable process. Now, taxes are no longer a source of fear or anxiety for Alex. He's in control of his financial future. At the beginning, Alex thought taxes were confusing and unfair. But now he understands. Taxes are simply the price of living and working in a system that provides roads, schools, security, opportunities, and once you understand how it works, you can actually use the system to your advantage. In the United States, it's not about how much you earn, it's about how much you keep after taxes.